For more on the markets, let's bring in Marta Norton, Chief Investment Strategist at Empower Investments, a unit of Empower, which has more than $1.6 trillion with a T dollars in assets under management. Marta, thanks so much for joining us. So what do you make of the setup from Nvidia last night and how markets are reacting this morning? Where should investors go from here?
Yeah, it's really interesting. I mean, there's no question that the reaction around Nvidia, with Nvidia beating expectations in most cases, is more sentiment driven than it is fundamental driven. When we have a stock like this and really a movement like this with AI, where there's so much enthusiasm behind it, it's really not much surprise that when results aren't picture perfect, there's going to be a bit of volatility around it. So I think that's more of a sentiment thing than a fundamental thing. I think the larger questions around AI that relate to transferring this CapEx spend that we're seeing into actual revenue and efficiency gains, I think that question is something that the markets are going to have to grapple with for quite some time.
Yeah, and it's almost kind of just a sigh of relief. Okay, yeah, they didn't beat wildly on the upside, but we know that the basic thesis about AI is still intact. What do you think the next big question for investors will be over the next few weeks, now that we've sort of gotten over the Nvidia hurdle?
Right. Well, I think with Nvidia behind us, I think all eyes go to jobs. The Fed and Chairman Powell in the speech in Jackson Hole made it very clear that the mandate has shifted. We've moved our eyes from inflation and, in fact, really declaring that that battle has been won and really turning focus onto the labor market. So I think as we start to see these jobs numbers come through in September, I think that's where the focus is, and that's really where expectations are going to be established for what the Fed does later in the month.
Yeah, and along with jobs, of course, a lot of focus on the consumer and some recent consumer names reporting like Foot Locker. Where do you see the consumer right now, and what are we learning from the earnings report on the ground about which types of consumers are struggling right now, where we could see some strength?
You know, it's really interesting with what we see with retail earnings, and that results in large part mirrored a broader earnings season that was largely positive. But it's almost boilerplate commentary in a lot of these retail earnings to talk about an uncertain future, a consumer who is more discerning, who's more value oriented, and seeing some bifurcation, which is something that folks have been talking about for quite some time, between the lower income and the upper income. And so I think this idea of discernment of a consumer who's more under pressure, a lot of folks are pointing to the idea that excess savings that we received from the pandemic have largely been used up. So I think this idea that the consumer is going to face a little bit more pressure and is going to be a little bit more in the epicenter of concern is something that markets will continue to think about.
And Marta, related to that, the market as a whole, if you look at the S&P 500, it's had this strong comeback from that pullback of 10% correction just about that we had culminating a few weeks ago. But the composition of the gains has been a little bit different. I mean, semiconductors are still 15% below their highs, even with the S&P within about 1% of its highs. It's been a little more maybe defensive, rate-sensitive names working. Do you see that as a potential, longer-term leadership shift, things like healthcare working, or do you feel like that's just a passing phase?
It strikes me that a lot of the S&P, the 493 stocks outside of the Magnificent Seven, have something that those stocks don't have, and that's valuation on their side. So while we have the Magnificent Seven type, the Nvidia and its friends, that are at high valuations, not sky high, but high valuations, and then you have the rest of the market that is really trading at kind of fair value. I think we're, well positioned to see that area produce. Now, I think the exciting thing about the rest of the market is that you have both cyclical and defensive stocks at reasonable prices. And I think these two areas can do well in different kind of economic outcomes. You have areas like small caps that can do very well if we're in a soft landing narrative and we have Fed cuts on our side. And then you have areas like, as you mentioned, healthcare or consumer staples that tend to be those defensive go-tos. And those can be great places to hide should we see, markets and the economy disappoint a bit more. So I think it's great that investors can really introduce optionality into their portfolio and kind of position for a range of market environments.